Welcome to the DSMR. This briefing highlights where smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. And when smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over there after the video to create a free profile. And with that, let's begin the daily briefing. Communication services sector institutional activity reveals a distinct divergence between industries. Smart money is currently navigating a markdown phase within the entertainment industry, putting downward pressure on prices to establish a discount zone and clear out retail participants. Conversely, the interactive media and services industry has entered a markup phase where institutions are actively driving prices higher to cultivate retail demand and build a positive price momentum. The discretionary sector is heavily defined by institutional buying. The smart money firmly in an accumulation phase for distributors as they absorb the availability supply from exiting retail investors. Meanwhile, the broader markdown phase is underway across hotels, restaurants and leisure, household durables, textile, apparel, and luxury goods, where prices are being driven lower to create discount opportunities and shake out weaker retail hands. Institutional strategies in the consumer staples sector remain entirely uniform. Smart money is operating in a markdown phase across all tracking industries, including beverage, food products, and personal care products, consistently depressing prices towards a discount zone to cultivate future supply while discouraging retail buyers. The energy sector shows concerted institutional upward momentum. Smart money has officially entered a markup phase across both energy equipment and services, as well as oil, gas, and consumable fuels, aggressively pushing prices upward to achieve more profitable zones and capture retail interest through rising price action. The financial sector presents a multi-layered institutional landscape. Smart money has locked into an accumulation phase within both financial services and mortgage REITs, strategically buying up shares from the supply pool as retail investors capitulate. Concurrently, a markdown phase is playing out in banks, capital markets, and consumer finance, with institutions driving down towards discount territory. In the healthcare sector, institutional flows indicate a distinct split in the market phases. Summary: smart money is navigating a markdown phase within healthcare equipment and supplies, pushing valuation down to search for a discount zone. On the flip side, healthcare providers and services, along with life sciences tools and services, are firmly in a markup phase, with institutions lifting prices to stimulate retail demand. The industrial sector is experiencing a highly polarized wave of institutional capital flows. Smart money is in the markup phase for aerospace, defense, air freight, and logistics, and construction and engineering, driving values to attract retail interest. At the same time, a markdown phase is pulling down valuations in building products, ground transportation, and passenger airlines as institutions maneuver prices towards a discount zone. The technology sector is displaying absolute institutional alignment towards higher valuation. Smart money is aggressively driving a markup phase across the board, covering communication and electronic equipment, instrument components, IT services, semiconductors, and hardware storage and peripherals, intentionally elevating prices to capture retail momentum. The materials sector highlights institutional accumulation taking center stage. Smart money has entered a highly targeted accumulation phase within paper and forest products, quietly building institutions' position from retail sellers. Simultaneously, the container and packaging industry is undergoing a markdown phase, with institutional forces steering prices lower into a discount zone. The real estate sector demonstrates contrasting institutional cycles. Smart money has entered a markup phase for hotel and resort REITs, industrial REITs, retail REITs, lifting prices into a profitable zone to trigger retail demand. Conversely, retail estate management and development is seeing smart money steering through a markdown phase, driving prices towards more favorable discount levels. In the utility sector, defensive assets are seeing strong institutional positioning. Smart money has entered an accumulation phase within water utilities, steadily acquiring assets directly from exiting retail investors. Meanwhile, a markdown phase is concurrently at play across electric utilities and multi utilities, where institutional pressure is letting prices drift lower towards discount territory. In closing remarks, the goal in investing should be to move with smart money and not against it. And our goal is to show you where the smart money is. An ideal bottom for going long is when smart money exhausted accumulation, and that's the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description, and if you found this report helpful, show us some love by clicking the like and subscribe, and we'll see you at the next one.